Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Thursday, July 29th, 2021. We'll start out with a quick overview of the broad markets. Not really nothing new to mention there, kind of grinding around last few days with the big FAANGs reporting. So we'll look at the a very brief overview of the FAANGs, 4 or 5 out of the way, or really 5 of the 6 if you include Tesla. Sometimes I'll refer to it as FAAMG+T. Tesla's, definitely a big enough market cap now that it can move the market. And then finally, quick updates on gold, silver, the US dollar, GDX, that's a gold mining ETF, and a few select commodities, including DJP, the commodities ETF. So let's start out here at least with the QQQ. Again, nothing new. This is a 60-minute chart. There's our 60-minute primary uptrend line coming off the May lows right here. Lots of reactions, breakdown, back test, rejection recently, and kind of there we are. So kind of flattening out. Again, most likely awaiting Amazon, one of the world's largest companies, going to report tonight, and then that gets all the FAANGs out of the way. So no change there. And again, chart's still indicative of a move down in the coming days to weeks once the dust settles after earnings. But we'll have to see of course, what happens tonight and into tomorrow. And well, tomorrow will be Friday, and then you have a decision as a swing trader: do you take or establish or add to any positions before weekend, or hold off to Monday? And that's of course your call. All right, so that's QQQ. That's how that looks. Nasdaq 100 futures, we're just going to focus on that for now. Same thing, same trend line here, 60-minute chart, same breakdown, back test, minor trend line break, gave us a secondary sell signal right here. There was our first sell signal. And again, outlook is still the same. These are my potential downside targets there. And again, to be continued tomorrow. And this is a 60-minute chart of ES, the S&P 500 E-mini futures. Same thing, continue to diverge, put a divergent high here, had a little blip of a correction, and kind of moving sideways. Again, this is earnings week here, peak earnings week, and there's your divergences. They continue to build. And so nothing has changed there. These remain, well, we've already hit that 4223 target. So if we have another leg down, I suspect we'll exceed that and come down to some of these lower targets here. All right, so again, broad markets, earnings season, kind of warned of that. Usually nothing big happens till they're all out of the way. Market will pick its next direction sometime next week. Probably we'll have a good idea. So let's talk about where the easy money is being made. Before we do that, let me roll into the FAANGs right now and just do a quick update. I'll go to the daily chart there. There's Apple. Apple already reported selling off. Nothing big again after earnings. There's our earnings day right there, the first day after they reported that night. And here we are kind of floundering around sideways, but below trend. So that's the most significant thing. We're still below this primary trend line on the daily. Okay, moving on. I had to pause the video there for a sec. Anyways, that's Apple. That's where we're at. No change there so far. Again, after earnings, there's Microsoft. Same thing. Not really going down, but not going up since earnings either. So don't try to read too much into it at this point. Breakdown, back test. That's to me the most significant thing. Breakdown, back test of the trend line. We're still below it. Should we move up, there's room for another back test and to keep the divergences intact. But anything much above that trend line would mean if we regained it, or Microsoft regained the trend line, and that's not going to help the bearish case. Amazon, again, they report tonight, so let's see what happens tomorrow and into next week. Facebook reported last night, and so far selling off, down 4% there. I have this trend line. I've had it for a while on Facebook right here. Not super crazy about it, but it's the best. I think it was a good fit. And what I believe happened here, and I've seen this before, we had a breakdown, and that's a whipsaw, false sell signal. It's a breakdown that I wouldn't have shorted or wouldn't have paid much attention to, because when a stock breaks out or breaks down just before earnings, this is common to see whipsaws. So again, you'll want to take any breakouts or breakdowns before or right before earnings with a grain of salt. Therefore, what I'm getting at is that trend line may still be valid, and that's where we're at right now. There's enough reactions there, I think, to help validate it, and especially if you exclude the whipsaw. So we'll see. And same story, it's been diverging, hence my outlook for the market and these potential targets on Facebook. You can see here, I'd have to sharpen my pencil and add some more at this point, which I can do for you. Rough targets right now, somewhere around here, 337, 338, call it 328, something like that. and maybe even tweak this one a little bit down to about that 297 level right there. Alphabet, Google's parent company, doing virtually nothing. Again, another one down since earnings, but you just can't make too much of that. That's not a big down. It's just, all these companies keep blowing it out of the water, hitting the cover off the ball, record earnings, and et cetera, et cetera. But yet, so far, the reaction's been muted, and that seems to be standard operating protocol with these guys lately. And over the last year or so, they report, there was a drift up into earnings, and then they report, they blow it out of the water, and then usually sell off. So we'll see if that pattern repeats. And then Tesla, again, big one, nothing but sideways action. They reported, but here we are, many months now, moving in a tighter and tighter range here, compressed. So that's it. That's how they look. I really can't extract too much from those other than most of those had divergence. And those that have already peaked, like Tesla, put in a divergent high back here and it's been moving lower, but and it's a pretty decent correction in percentage terms, but mostly sideways. Again, let's not make too much of this one until or unless it breaks from between that range I just highlighted right here. Okay, on to the good stuff. Like I said a minute ago, it's like trying to squeeze water from a rock, making money out of the broad markets, the major indexes when they're going sideways, especially when volatility is low and prices are compressed. That won't last forever, and that'll be a good trade. By the way, the VIX, I'm just going to digress. I didn't plan to cover it, but when the VIX, when the market finally breaks out, this range bound, we get some movement, especially to the downside. The VIX has plenty of room to go. This is support right here, about 1622. Positive divergence has been building, and again, it's not as if it hasn't worked. We had divergence here, pop. We had divergence here, pop. And so far, just these little pops. Whether we get one of these big pops, well, that's going to depend if the market breaks or not. But as of now, the VIX is, just off support, 1622. If it breaks that support with conviction, it has support all the way down here around 12. So this would entail the market just shrugging off these divergences, going on, running up another 10-20% plus, whereas this would be the case that these divergences start to play out soon, and I'm still leaning that way. So that would be a the VIX or any of the VIX tracking ETNs really, such as VXX or I think TVIX is still around. Or did that one blow up? No, there it is. Short-term VIX 2 times. Okay, now moving forward to gold. Gold recently hit this top of the buy zone. This is a long-standing buy zone I've had since back here. Calling it a top, it's a tradable top on gold, and mentioning this as moderate support, the top of the buy zone, and the bottom is solid support. So we had a trade on the initial tag at the top, then went to the bottom, again, and that was my hard buy level, and rallied up and came back, and we're back testing the top. So this was a successful defense of the bottom of the zone, broke out, back tested, and I mentioned this as an objective long recently for swing or trend traders getting back into gold, as well as these levels here, and so it's still, to me, I believe that's probably it, and we'll probably continue up and eventually take out these previous highs and keep going. I'm still longer term bullish on gold. Shorter term, I gave you this recently, 60-minute chart of GLD, bullish falling wedge, just like the gold futures 60-minute chart I've been highlighting. Went on, hit our first target, resistance. This was our buy zone, pull back to that former resistance, now support level about 167.55. You had plenty of opportunities here to get back in, and a nice move today, challenging that previous high right there, and I still maintain at least at minimum for swing trader T2 and T3. T2 is at 172.86, T3 is at 174.43. Of course, those are unadjusted targets. If you're targeting one of those or any or both, take a partial position off, and or a full position, recycle back in, however you like to trade. Best to set your sell limit order a little bit below that. And on a $174 security, more than just a couple pennies, maybe 5, 8, 10 cents or better. And also I like to align with the futures chart. That's, when trading gold or silver futures, you get more bang for your buck because they're leveraged. but you have to take that leverage into account, of course. If you're going to go with a leverage position, cuts both ways if it goes against you. But this is gold GC. I've been harping on this one for weeks now. Support buy zone right here. Many opportunities. This was our initial buy signal right here. Let me change that color. On the breakout of the bullish falling wedge pattern, T1 hit, T2 hit, pull back to the support buy zone, and then, as I mentioned this morning in the update, just beautiful action. We broke out. I gave you this downtrend line recently, and so that would be your next buy signal, and we took it out, and it's been a nice run today. Futures are up 1.73% right now. And what was that ETF up? Let's go back to gold. The gold ETF is up 1.2%. So nothing much, but remember, you're always going to get more bang for your buck when you trade the miners or silver. They tend to move up more. And so GDX is up 3% today, 3.13, right to the first target. I laid out these targets in one of the recent videos. I gave you this bullish falling wedge pattern here. There was your breakout. Actually occurred yesterday. And then we gapped up because remember the futures ripped in the pre-market early hour overnight session, and that's what happened. So you want to be, take these breakouts. You gapped up and boom, hit that first target. And so far we've been trading on it, 35.22. Lots of reactions there. Still favor breakout and I continue to move up to my next target, 36.82 right there. Futures, quick update on that. GC, as I showed you a minute ago. There was a breakout. This was a former T2 level. That was resistance. We do have this previous reaction high right here. We're close to it now, but I still favor, as I said this morning, move up to T3 and T4 there. And then, as I said, you get more bang for your buck if you trade silver. This was silver futures. As I told you yesterday, I don't have a great downtrend line. You don't have a lot of reactions here. Maybe this and call it a bullish falling wedge. But when gold broke out, you could go long silver as a proxy. If gold breaks out, with few exceptions, silver's going to follow, and it's up quite a bit more. It's up 3.6% today, right to that first target I laid out recently, 25,764, and it's been there all day. You can see 25,765 right now, and that's where I have that line at 25,764. Next target 26,567, then 27,511, and then 28,490. And that's silver futures. And of course, if this does become a valid line, if we get a reaction here especially, that'll help validate it, and then a breakout of that wedge would be the catalyst for a rally up to those other targets. Okay, and we're finally, of course, not of course, but part of the a big part, if not all of it, of the rally in gold. And it's a chicken and egg thing. You have the setup in gold, and gold, as a standalone setup was solid on the breakout of that trend line, or long on a pullback to support. But then all the better, as I said, if the dollar played out and we finally, this bearish rising wedge pattern broke down, back tested, we were kind of inching lower, but finally, the masses got the memo that the US dollar put in a divergent high, broke down from a bearish rising wedge pattern, and the selling is starting to become more impulsive. So this right here, this impulsive leg down, mirrors that impulsive leg up in gold. So there it is, and you can see we broke that, the dollar broke that first target I had, 92.063, and that should open the door, even if whether or not we back test, for a move down to the next target there, and that should coincide with another thrust up in gold. Should we kick back more? Well, this downtrend right here is still valid, and that might be an area to short the dollar or go long gold, especially if gold pulls back to support at the same time there. And then, of course, you can be trading the euro if you want to, profit, or if you like Forex, and same story. Euro is like the dollar in reverse. There it is, finally starting to move up impulsively. And I don't have targets for you now on this one. If you want them, just let me know. Drop a note under this post in the comments section. I'll be glad to mark up some targets if you're a euro trader. Okay, and a quick update on commodities in general. This is an ETF, one of many out there, or an ETN I should say, but it's very well diversified, tracks the Dow Jones USB Commodity Index. It's got a little bit of everything, including precious metals, crude oil, agricultural commodities, industrial metals, you name it. And so it's kind of a benchmark for commodities as a whole. And I've been highlighting this price channel for a while here, and that's it. We've been running to the top of the channel, the bottom, provides long entries, objective long entries. We did have divergence here, and we had a correction. We had divergence here. We had a correction. That divergence only extends now, so I need to point that out. However, these guys commodities are in a bull market. Make no mistake about it. This is on a scale 1 to 10, this is a 10 for just recognizing what a trend looks like, especially well-defined, clean-up trend line, higher lows, higher highs, and that's it. And we took out these previous lows in again, so I've been making the case for quite a while. Unlike the Fed has a mixed bag. I've been reading now. There are some Fed members that are concerned about inflation longer term, want to put the brakes on a little harder, and then the other half, including Powell, keeps saying they believe the inflationary forces are transitory, just as the economy's been coming back online due to supply chain disruptions. We'll see. One of us will be right, the other will be wrong. But again, to me, it's not just a hunch. It's what I'm seeing in the charts. Again, many commodities, most of them, if not all, showing evidence that we're in early stage bull market action, not a bear market rally, as I guess Powell would imply. And so that's it. I'll continue to be selective, and I'll update commodities. I keep an eye on track, try to follow them all. Sometimes I'll miss one here or there, but I'll try to update which ones are strategic for swing trades. A long-term investor can have a core position in commodities or a broad-based commodity ETF or ETN like this. And what you'll want to watch out for, if we break this trend line, if we break it with conviction, that might mean we're going to have a deeper correction in commodities. But as of now, that's not the case. Trend remains bullish, and that's that. And here's lumber futures. This is a long-term chart, the daily chart. I'm going to zoom in. This spans back into 2017. Let me zoom in a little bit, and I'm going to show you a development that I've noted recently. Okay, I pointed this out not so long ago. The last few bottoms, we had one here, there was a bottom, and I believe this is a bottom. We had something in common. The PPO was at low levels, really stretched. We're very oversold. I think you can, no, you might not be able to make it out there. Now we're in full view. So here were the similarities. You were oversold. Here's RSI readings showing you were oversold on those bottoms. And then you had the PPO turn up, attempt to make a bullish crossover, but got rejected on the initial time, bounced off, and then shortly thereafter made a bullish crossover that marked the bottom. And you got that run there. I don't think it's measured out, but it was probably well over 100%. Oh yeah, well over 100%. We went from, I don't know, what is that, 250 or so up to 825. Then again, same thing. We were turning up, looked like a bottom, and then the bottom came after on the bearish PPO crossover, oversold conditions. Same thing here. There was our rejection, and there's the bullish crossover on the PPO. It has happened. So therefore, after a 71% drop, remember this was the biggest rally in many years, if not in history, at least in a couple decades. And we did exceed. I talked about it before. We were in a lot of these corrections. We're about 50%, give or take. This one's bigger so far at about 71% into the recent lows. But that's the case. So I'm still bullish on lumber unless the whole commodities arena buckles. We see something come out of the Fed that maybe puts the brakes on that for a while. Even a correction right now in commodities won't change my longer term outlook. It would take a lot in the charts to do that. So I just wanted to mention that. And then zooming in, that's the daily chart. That's an end-of-day chart. So this is our 60-minute, or actually 30-minute chart is what I've been focused on recently, and that's it. So we're coming off this divergent low here. We broke above the downtrend line, went on, hit the first target, pulled back, and here we are. So we need to get on up there. We've already hit T1, which is 705. So if we run at it again and can take it out, that should open the door for a move up to T2 at about 855.25 and or T3 at 934. And let's just focus on those for now. Depending on what happens, we could head all the way up there, but I suspect that's going to take the stock market to continue to hold up. Otherwise, if the stock market were to buckle or at least show some weakness for a while, that's going to slow down housing, and then that might curtail the demand for lumber. So we'll see. So I'm just near term looking at T2 at this point in time. And then a quick update on NG. I threw that one out as a trade idea the other day. We had an impulsive breakdown here. Surprisingly, at least for me, we reversed shy of my initial target at 380 so far. I still think we'll get another leg down there. We're right now even with the breakdown point. You can see that. So ideally, and doesn't have to be this way, but ideally we reverse here soon. Go on down there, and we got close enough to 380. We might just continue down, hit that 374 target, and then I have this downtrend line or uptrend line. I'm sorry, that comes in. And I think if we get an impulsive move down, if you're in this trade or you take it, and we're heading down there soon with a lot of downward velocity, one of these, impulsive drops, then we'll probably overshoot the trend line by a hair, momentum fueled overshoot I call it, hit 375 or 357, and then reverse and close back on and then bounce off it ultimately. So still a potential trade. I'm not crazy about the snapback rally and the fact we reversed coming so close to that first target. So you can either take it, put a stop somewhat above, or wait and see if we get a rejection here at the breakdown point, and then take a position if you're not already short natural gas. And then last but not least, on a somewhat related note, crude oil. Same thing, we still have the divergence. It did pop above that, a little bit above that 72.63 resistance it was struggling at recently, but we still have divergence. We're still well below this previous reaction high here. And so if crude is in a downtrend with more downside to come, these divergences should stay intact and play out soon for the next leg down, and that is crude oil. All right, let's wrap it up here. Keep it relatively brief, 21-minute video. Get out to you guys, and if I see anything else that stands out today, I'll do another video or post an update with some static charts. This has been Randy Finney with Right Side of the Chart. Have a great day.